Good afternoon, traders. Welcome to my new FreeFX video. Today is Tuesday, the 13th of October. We're going to talk about today one of the topics that has been suggested by a forum user on babypips.com. And the topic is the how to create a trading plan for oneself, including a trading strategy, entries, a time frame really, and a number of things of this kind. So, for example, if we started on the actual list of topics, the particular topic that was suggested here was the following, and I quote, this is the forum user saying, the topic they'd like to be discussed would be how to construct, and I quote, your personal trading system, time frames, selecting a set of meaningful and complementary indicators, how many, what types, deciding profit and loss levels, which markets, etc., etc. So let's start with the very beginning of that question, which is how to imagine that you've already made the decision or taken the step to sign up to a broker. Maybe you've heard about it from a friend, or you just read it up on Google, and you go to a broker, maybe let's say one of the bigger ones. It could be Oanda, FXCM, could be any of those, and those really are the ones I know. There are others with forex.com, but let's say that you chose whatever you heard about, and the next thing is you sign up. Maybe they give you a demo account, which it's quite common, and then you start playing around. And maybe you want to trade currencies from the beginning because of leverage and obviously the opportunity to participate in the market with limited fund, a sort of smaller fund than trading one-to-one. So with a real money, so that could be something that pushed you to go into the forex. But perhaps you haven't quite decided whether it is for you because you haven't really tried it. So you go into a demo and you start trading, and perhaps you get lucky, and so you're hooked. So the next thing to do is obviously you want to embrace the good fortune and go live quickly before either the fortune runs out, or your enthusiasm runs out, or your funds run out, or your friends find out, or your family find out that you're doing this and they're not happy with it and they start bullying you, or at least advising you strongly to stop, because you're going to get ruined. There could be a number of things why people, and I've done that myself, rush into live trading. Perhaps you want to get rich quick. You quite believe it once you start getting the results on the demo account, and you start listening to all the doomsayers that say, "Oh no, don't believe your luck, your beginner's luck. You will get punished by the markets if you're not careful, etc." So let's put all that aside, and let's say that you are at a stage where you've more or less sensibly decided for whether you've made losses or not. But let's say you've decided to go live, and you're carefully constructing the system. And this is where obviously the big question is what system to use, by which I don't mean a sort of set of pre-made rules that you buy, like Zombie Trader or Zulu Trader, or some kind of some kind of preconceived package that you purchase or that you assign to, but really something that you yourself have constructed based on your needs. Just like going to going to a shop and getting a dress or a suit made for yourself, rather than buying it off the peg, as they say. So it's tailored, and this system needs to be tailored not just to your financial needs, but your life needs. That means that you may be a person who has family commitments. Let's put family before job, because this is really important. A lot of traders assume that the typical sort of trader is single, young, has a lot of computer thirst to be sitting in front of a screen for hours on end, and just hungry for money. But there are other things in life as well, and a lot of people who come into trading may not necessarily fit into that sort of category. And so you need to ask yourself, if you are one of those people, forget everything you heard about how you should trade, because really there are ways of trading around personal commitments. And of course, there are also paid jobs that you might be doing. So it could be a full-time, you could be in part-time paid employment. You could be a volunteer. Maybe you don't have to work at this particular point in time because your partner supports you, and maybe you're unemployed and you're on benefits. It doesn't mean that you can't trade if you're unemployed. You can still try a demo account and save money if you can for later in life, and really just try this safely without obviously risking anything. In terms of having put all that aside, your trading system you're designing around your needs and the needs of the people around you, because the people around you could be people in your paid job that obviously need your full attention when you're there. You can't be on your mobile trading while you're supposed to be doing other things. And people at home, you may have a family, you may have a significant other, or whatever, you may have a pet, a dog needs to be walked, etc. So you may also want to take all those things into account. Once you've decided on what kind of time you have every day, because at the beginning especially, you will be putting a lot of time into this, and it may not be time that you want to be putting in forever, but at the beginning certainly you want to be putting a lot more time because you're new, and also enthusiasm is a great thing when you start something, and that's the time to really put in a lot of time, a lot of energy into something while you've got a strong bit of enthusiasm for something new before it becomes routine. That's a really good time to embrace it fully and really just absorb as much as you can. Later on, you can sort of cut down on that, but there's no reason to stop that enthusiasm at the beginning. It's not harmful, as long as that enthusiasm doesn't mean that you're going to go out and put in all your savings into a live account, and just trade it like crazy and blow your account. So let's go now to the second part of the video, which is really starting on. I've got a chart in front of me here because it's always good to have an idea of sort of, let's put all that aside and start looking at something that you might be looking at when you start trading, which is something like this. It could be obviously a very different size. You might think, well, I don't like that chart package at all. I don't want the white background. I don't like blue candles instead of green candles, and I just don't like the package. Fine, doesn't matter. I'm just using what I'm used to. So just try to look at it in a sort of universal way and think, well, a chart is a chart more or less. So that the ideas behind how to approach this should be transferable to other packages. Now, the first thing is the forum member was talking about your personal trading system starting with time frames. So let's say I trade sort of longer term more and more because of my lifestyle. I'm busy. I'm now self-employed, which gives me more time, but perversely actually gives me less time because I have to find work, and I'm taking on various different strands of projects. So I'm very flexible with when I can or cannot look at charts, etc. But obviously, depending on what kind of job you have. So longer term trading means that I don't have to be trading at specific times. It's over long periods of time. We're talking weeks and sometimes months. So that means I'm just monitoring, etc., more than actually actively trading, which means I'm not pushing buttons every day, clicking on the charts, opening market entries, etc. So market orders. So this chart here is where we're going to begin our conversation. So first of all, time frames. Let's say that you're starting out and you want quick results and need to check your system. You might want to go into quicker time frames. Not saying that's the correct way about it. In fact, shorter time frames are the easiest way to blow your account because you get very enthusiastic, very actively involved in your trades, trade a lot physically. Really, it could be very easy to get emotional about things, and revenge trade, as they call it. So really try to make up for losses very quickly, etc. But let's say that for discussion's sake, we start with a shorter time frame. What the advantages of something like this is, let's say that this is pound yen, which you may never want to trade as a beginner because maybe you trust more the euro, dollar with low spreads, etc. But just forget it's pound yen. It's a chart of currencies. And we have here, this is 8 o'clock this morning. Okay, so this is basically today, and this is GMT, but so now it's sort of afternoon, obviously. We come into 5 o'clock. So basically, this is a typical workday, sort of 8 till 5, if you like. And today, basically, if you look at the levels, we've gone from 184, roughly, just above, to a low of 182, just below. So, that's basically we moved 200 pips down. The pound has taken a bit of a pounding today, excuse the pun, but the movement today has been quite considerable. So if you were trading with a 5-minute chart, you can see in a day, you can see the wider view, but also the sort of 5-minute to 5-minute. There's been a lot of movement within those short kind of term candles. These are candlesticks. You may want to do pin bars, you may want to do lines, and you have to decide on that. But let's say we're using candlesticks. So this time frame suits somebody who wants quick action, and at the beginning you might want to do that. So you set time frames based on that. As I've done in another video, obviously, time frames might be something that give you false signals, because if you flick between them a lot at the beginning, you might get really confused unless you know what you're looking for. So let's say this is the 5-minute. So in the 5-minute, we have this we have this movement essentially today from high to low. So it's definitely a sort of downtrend day. Okay, so let's keep that line in there. I'm going to make it a little bit thicker, so just to give you an idea. And so this might influence your profit and loss levels, which is another point that the forum member was talking about, which is, obviously how to decide on profit and loss levels. So if you entered at the high, if you were lucky enough to go short here, and your level was here, you would have got more than 200 pips, which is great. But let's say that, shrink it a little bit more. Let's say that at this point you identified a zone here, which was sort of a demand zone here, or sort of buyer's level. Okay, so you think, okay, this is going to go higher, but maybe at some point it's going to bounce back. And you go further back, and you start looking back, and you think, it's very inconclusive at the moment, because it bounces off here, and then it consolidates a little bit lower, and then it goes back up to this level. So you're not quite sure. So the 5-minute might not be enough to go, well, okay, with hindsight, this is quite easy to see. Let's go to the hourly. Now you start seeing this little drop here becoming smaller, and this is basically where we're at. So we are here essentially today. Okay, this is the high today. Yesterday's high was there, and that's where we were yesterday. Now that you see the hourly chart going back a little bit further, you can see that actually we've been in a sort of mini uptrend. But how far does that uptrend go? So if we went to okay, now we start seeing that our little line here has become just part of one candle, so it's gone vertical. So that's not going to help us much in this kind of time frame, which is a daily chart. So it really just with the pound yen gone up and up and up and up and up, and now we're sort of at an actual trend. So if I took that line there, okay, and borrowed it and maybe actually changed it really to this, now you can see how it's starting to look quite different. Okay, it's sort of one uptrend, part of another uptrend. So actually the whole thing looks more like this, okay, depending on how you draw your uptrend. So we're part of this sort of long uptrend from here, from 2012. We've gone up quite a bit. We come down to this sort of floor, but then you might say, well, that actually broke because of that. Okay, that broke, and we're down here. In which case you might want to do several trend lines. Maybe that one is one. You might want to do another one for this segment here, a little bit more at a different angle, if you like. But so let's go back to this. So we're at the bottom of this. So if we entered short today at the top here, this is our today candle, we would see how it's retreated with a long wick. Okay, so we would have basically gone short, maybe taken profit, fine. But if we entered a little bit further down, we could have even been either stopped out or other things might have happened. In other words, your time frame depends also on the general your choice of entry depends on what the different time frames are telling you. The 5-minute time frame might have said go short, but if you've gone for a daily, you might have gone, this is not the right time to go short. I will wait until this bounces a considerable way, maybe up to here or even up to here, and then go short and play this sort of channel from this top here to the bottom. So the time frame really depends on how long you want to stay into a trade, whether there's a negative rollover. Pound yen, obviously, the pound wins over the yen, so you can stay long and sort of collect positive interest over time. So that's one thing as well. I'm running out of time. I've only got 15 minutes. So before I finish, just to kind of summarize, your time frame depends, 1, on your personal needs and the time you have to trade. 2, on what kind of currencies you trade, whether it's positive or negative rollover and interest over time. 3, how much, so what your profit targets would be, and general direction of a trend, whether the pair is trending or not, that influences that as well. Thank you very much for listening. The next video will be on another topic of your choice. Good luck trading up there.